In the United States today, the top 1% owns more wealth than the entire bottom 90% combined. That isn't a rumor, it isn't a theory, it is a measurable financial fact. But here's the truth people avoid because it's too uncomfortable to process. The rich didn't just benefit from this system. They engineered it. Slowly, silently, strategically. Every law, every bailout, every loophole, every crisis tilted the playing field a little more in their direction, until the economy became something ordinary people weren't participating in anymore. They were trapped inside it. Before we dive deep into this, take a moment to subscribe, like, and comment so more people can finally see what's really happening behind the numbers. Most people think inequality is something that just happened, like weather. They think the system naturally evolved into what it is today. But if you look closely at the last 50 years of economic policy, you notice something chilling. Nothing about this system is accidental. Every shift made life easier for the wealthy and harder for the poor. Not through one dramatic change, but through hundreds of small ones. It starts in the 1970s, when wages first stopped growing. For decades before that, every new year meant a little more money for ordinary workers. As the economy grew, so did paychecks. It wasn't perfect, but it was predictable. Then something snapped. Productivity kept rising, corporate profits kept rising, but wages flatlined. The rich captured all the gains, and the rest of the country stayed stuck in place. And because the stagnation was gradual, people didn't realize they were being shifted from participants in the economy to prisoners of it. This is when the wealthy discovered their most powerful tool, policy. They realized they didn't need to change society through force, they could change it through laws. If you've ever wondered why tax codes are complicated, it's because complexity benefits those who can afford to navigate them. Every deduction, every loophole, every offshore structure is a door that opens only for people who know where it is. That knowledge is expensive, and that expense is what keeps regular people locked out. Meanwhile, the middle class started relying on credit to maintain the lifestyle the economy no longer supported. Credit cards spread across households. Mortgages got bigger. Car loans became longer. Debt became the cushion that made stagnation invisible. It gave the illusion of stability in a system that was slowly tightening around people's throats. The rich didn't need to trap the poor by force. They trapped them with interest. Then came the 1980s and the era of deregulation. Rules designed to protect consumers, workers, and markets were peeled away one by one. The justification was always the same. It will make the economy grow. And it did grow, but only for those at the top. When financial institutions were allowed to take on more risk, they did. When corporations were allowed to cut jobs and move production overseas, they did. When companies were allowed to prioritize shareholders over workers, they did. Every deregulation made the rich richer and everyone else more vulnerable. People often forget this. The wealth gap didn't widen during recessions, it widened during recoveries. That's because downturns hurt everyone, but recoveries lift only the top. When markets rebound, the poor are still paying off debts from the last crisis, while the wealthy multiply their money. The rich discovered something else. A crisis isn't a threat. It's an opportunity. In every recession, assets get cheaper. Wealthy investors buy them. Then the economy eventually recovers, and suddenly the rich own even more of the country than before. This cycle happened in 1987, in 2000, in 2008, and again in 2020. Each crisis transferred wealth upward because the system was designed to funnel every shock into an advantage for those who already had power. The 2008 crash is the clearest example. Millions lost homes, jobs, savings. But while ordinary families were struggling to survive, the government bailed out the biggest banks and corporations. Not because they deserved it, but because the wealthy had written the rules that way. The message was simple. When the poor make mistakes, they suffer. When the rich make mistakes, the country saves them. That's not a free market. That's a hierarchy disguised as capitalism. People often ask, why don't the poor just save more? But how can they? Wages are flat. Rent is rising. Healthcare is unaffordable. Education is debt. And inflation quietly eats away whatever scraps people manage to hold on to. Meanwhile, those at the top don't just save, they invest. And invested money grows like a living organism. A dollar sitting in a rich person's portfolio multiplies faster than a dollar in a poor person's pocket. It's not because the wealthy are much smarter. It's because they have access to the kinds of assets the poor can't touch. While the rich are buying stocks, real estate, businesses, and private equity, the poor are buying groceries, gas, and medical bills. One group is building wealth. The other is buying survival. But the most powerful mechanism the rich use to maintain control is something most people don't even notice: time. Wealth buys time. The time to plan, to learn, to invest, to sit through downturns without panicking. Poverty steals time. The poor spend their lives racing from one bill to the next, one emergency to the next, one crisis to the next. They aren't thinking about 5 years from now. They're trying to survive next Friday. When your mind is in survival mode, you don't build wealth. You don't get ahead. You just keep your head above water. And that is exactly what the system wants. The rich also influence culture. They push the idea that failure is personal, not systemic. They want people to believe that hard work alone determines success, even though they know the system isn't merit-based. They want people to blame themselves for financial struggles, so no one asks who built the structure that guarantees those struggles. If the poor blame themselves, they never look up to see who's holding the levers. Look closely, and you'll notice another strategy: ownership. The rich own everything that generates recurring income: housing, healthcare, media, tech platforms, food distribution, supply chains, pharmaceuticals, energy. Even the debts the poor owe are often owned by the wealthy. When someone pays interest on a credit card, a mortgage, or a late payment fee, that money travels upward. Every dollar a poor family loses is a dollar that strengthens the top's control. Even opportunity itself became a commodity. Education used to be the ladder out of poverty, but now college is a trap that begins with a loan. The rich send their children to elite schools, free from debt, free from worry, connected to networks that guarantee success. The poor send their children into a system that charges them for the privilege of chasing opportunity. By the time they graduate, the race hasn't even started, and they're already behind. Then there's politics. The wealthy don't need to buy elections. They buy the structure around elections. They fund think tanks, lobbyists, political campaigns, media outlets, and advocacy groups. Not because they care about ideology, but because they want policy shaped in their favor. Tax codes, regulations, bailouts, trade deals, all influenced quietly, consistently, strategically. When you can shape the rules, you don't need to cheat the game. The most tragic part is that the poor often end up defending the very policies that harm them. They are told that helping the wealthy helps everyone. That tax cuts for corporations create jobs. That deregulation increases freedom. That suffering is temporary. That opportunity is equal. But behind these slogans is a simple truth. The system works exactly as it was intended. It lifts those at the top. It burdens those at the bottom. And it keeps everyone in their place. But the trap isn't just financial. It's psychological. When people feel powerless long enough, they stop resisting. They accept the system as inevitable. They accept debt as normal. They accept exhaustion as life. They accept inequality as fate. That is the ultimate victory for the wealthy. Not controlling money, but controlling belief. Yet the trap has a weakness. Every system built on imbalance eventually reaches a breaking point. The cracks are visible: rising defaults, record debt, shrinking opportunity, a generation losing faith, an economy that relies on hope in a nation running out of hope. And underneath all of this, there is one unavoidable truth. A system that requires the poor to stay poor is a system that eventually collapses under its own weight. The economic trap the poor live in today wasn't just built through money or policy. It was built through architecture. The architecture of modern life. The design of cities, the structure of jobs, the price of essentials, the psychology of scarcity. Everything around us has been arranged in a way that funnels wealth upward while quietly draining those at the bottom. And the most disturbing part is that most people don't realize they inside a system designed to extract from them every single day. Think about housing. Decades ago, a family could buy a modest home on a single income. Today, even two full-time workers can barely afford rent, let alone a mortgage. Homes didn't get more valuable. Money got weaker and ownership concentrated. Large corporations and investment groups now buy entire neighborhoods before ordinary families even get the chance. They turn houses, the symbol of stability, into profit machines. When families pay rent, they're not paying for shelter. They're paying someone else's wealth to grow. The rich discovered something powerful. If you control where people live, you control their future. And once you control housing, you control the biggest expense of every working-class family. That alone ensures people remain trapped in the cycle of survival, not advancement. Then comes healthcare. In most developed countries, healthcare is a right. In America, it's an industry. The rich don't worry about medical bills. They don't fear emergencies. For the poor, one accident, one illness, one unexpected diagnosis can erase years of progress. Medical debt is one of the largest causes of bankruptcy in the country, not because care is expensive, but because profit is prioritized over human well-being. The price of staying alive becomes another chain around the ankles of the poor. And education follows the same pattern. It promises freedom but delivers debt. The rich use elite universities as gateways into powerful networks. The poor use colleges as Hail Mary passes, hoping a degree will save them. But the cost of that degree crushes them before they can even use it. It's not an accident that education became expensive. A society where knowledge is free becomes harder to control. A society where education is debt-based becomes easy to manage and even easier to profit from. When you connect these pieces, housing, healthcare, education, you start to see the outline of the cage. But the bars get thicker when you examine the labor system. The modern workplace wasn't designed for the poor to rise. It was designed for the rich to extract. Workers trade the most precious resource they have, time, for wages that barely cover the cost of living. Meanwhile, the rich earn money while they sleep. Passive income is the reward for ownership. Hard labor is the punishment for lacking it. The wealthy don't need to work at all because their assets work for them. The poor work constantly because they have no assets to rely on. This is the fundamental divide the system protects: ownership versus obligation. If you own something, the economy supports you. If you owe something, you support the economy. Look closer, and you'll notice how even the smallest everyday behaviors contribute to the trap. A late fee, a bank overdraft fee, a credit card penalty, a payday loan. These aren't mistakes, they're revenue streams. Every time someone slips, the system charges them. And when the poor slip, they fall faster. They fall harder. They fall into a place designed to be difficult to climb out from. You can see this logic clearly in consumer culture. The rich create the trends, the poor pay for them. The wealthy invest in companies, the poor buy the products. It's a perfect loop. One class produces profit, the other consumes it. And when you look at the numbers, you realize the truth. Consumption is the fuel that keeps the system running, but the benefits flow upward. The average person pays for every subscription, every service, every product, every fee. Meanwhile, the owners collect, slowly, consistently, endlessly. This is how the trap becomes invisible. It hides inside normal life. It hides inside what people assume is just how things are. And because it's invisible, it becomes permanent. But the trap has another layer: psychology. The rich mastered the art of shaping belief. They pushed the idea that poverty is a failure of character. That people are poor because they didn't try hard enough, weren't disciplined enough, didn't work enough. This narrative is powerful because it's a lie that feels true. It prevents the poor from seeing the system. It prevents them from realizing the game is rigged. If people believe they are the problem, they stop questioning the structure. They stop asking why the cost of living rises faster than wages. Why rent increases, but salaries don't. Why debt grows, but opportunity shrinks. Why a system that claims to reward hard work produces millions of exhausted people who can get ahead. The rich sell the dream of success while building barriers that ensure most people never reach it. And every generation inherits these barriers. Children born to wealthy families grow up in a world designed for them. Tutors, elite schools, safe neighborhoods, connections, clean environments, financial cushions. Children born to poor families inherit stress, limited choices, unsafe environments, underfunded schools, and a life spent playing catch-up. The rich begin life on the 10th floor of a building. The poor begin life underground. But the most strategic decision the wealthy ever made was turning poverty into profit. Credit became the leash. Loans became the trap. Interest became the mechanism that transfers money from the desperate to the comfortable. The poor don't just work for the economy, they finance it. They pay more for everything. Higher interest rates, higher fees, higher penalties, higher insurance premiums. Even groceries and basic necessities cost more in poor neighborhoods. It's not that the poor can't escape. It's that the system profits when they don't. Crisis events accelerate this process. Each crash, each recession, each downturn becomes another moment where wealth transfers upward. When markets fall, those at the top buy cheap assets. When markets recover, they own more of the country than before. Meanwhile, the poor lose everything in the fall and have no capital to take advantage of the recovery. The cycle repeats until ownership is concentrated in fewer and fewer hands. This is why the rich don't fear economic crises. They wait for them. They prepare for them. They build fortunes from them. They know something the poor don't. Crises clean the table. And whoever has cash during a crisis dictates the next chapter of the economy. Technology made the trap even tighter. Algorithms track spending habits. Corporations perfect psychological manipulation. Ads target vulnerabilities. Digital platforms monetize distraction. Every swipe, every click, every purchase shapes behavior. The rich don't need to control people physically. They control their attention. And once they have someone's attention, they have their decisions, their impulses, their fears. But the biggest shift happened quietly over the last 20 years, the transformation of political power into economic power. The wealthy didn't just gain influence, they became the system. They fund campaigns. They write policy drafts. They shape economic strategy. They influence monetary decisions. Their hands are on the levers of government, not because they staged a takeover, but because the rules allowed it. Today, economic decisions are made by people who will never experience the consequences of those decisions. Laws are written by people who will never feel the weight of the policies they pass. And the poor live inside the outcomes they never voted for, never asked for, and never benefited from. But the most dangerous part of this entire structure is that it appears stable. It appears normal. It appears unchangeable. A trap is strongest when the people inside it don't know it exists. The system convinces the poor to keep playing a game where the rules guarantee they lose. And yet, beneath the surface, pressure is building. Debt is growing. Wages are shrinking relative to expenses. Confidence in institutions is disappearing. The younger generation sees the truth earlier. They feel the trap closing. They feel the weight. They feel the imbalance. And their frustration is the first warning sign that the system is reaching its breaking point. Because a society can tolerate inequality for a long time, but not forever, especially not when millions realize the ladder they were told to climb was never attached to the wall. The economy the rich created is powerful, profitable, and deeply unfair. But it's also fragile. It depends on a quiet population, a hopeful population, a population that believes in a future that still includes them. When belief collapses, the trap breaks. And when the trap breaks, the system built on it begins to crumble. The system the rich built relies on a delicate balance. People must struggle, but not revolt. Hope must shrink, but not disappear. The poor must feel pressure, but still believe escape is possible. That thin illusion is the glue that keeps everything in place. But illusions don't last forever. When enough people see the truth, the structure begins to shake. Over the years, I've analyzed dozens of economic collapses, from the Great Depression to the 2008 financial crisis to the silent crashes happening worldwide in emerging economies today. And there's a pattern most people never notice. Societies don't break when inequality becomes large. Societies break when inequality becomes undeniable. When the average person can no longer pretend the game is fair. When the system loses the last bit of trust that holds it together. Right now, America is standing on that edge. The poorest households are drowning in debt. The middle class is shrinking faster than any time in modern history. The wealthy continue to accumulate assets at speeds that defy logic. And younger Americans, raised on the promise of opportunity, are waking up to a reality that looks nothing like what they were told to believe. The rich built an economy the poor can escape by turning every basic need into an instrument of profit. Food, water, electricity, transportation, communication, education, housing. Every corner of life is monetized. There is no part of existence that isn't touched by a bill, a fee, an interest rate, or a corporation that owns the infrastructure. Even rest has a price. Even illness is profitable. Even failure is monetized. When you examine the system closely, you see that it rewards the wealthy for creating products that people can't live without. Not luxury items, but essentials. And when essentials cost more and wages cover less, the wealth gap stretches until it becomes a chasm. The rich don't just make more money. They extract it from the very foundation of people's daily lives. This extraction becomes generational. Wealth compounds over time. Poverty compounds even faster. Each generation of wealthy families adds to their assets, and each generation of poor families adds to their burdens. Children inherit the consequences of decisions they never made. Some inherit trust funds, others inherit debt, and in that difference lies the full architecture of inequality. People often ask why the poor don't simply work harder, but that's the ultimate misconception. Hard work is valuable, but it's not enough when the world has been engineered to reward ownership over effort. The wealthy don't get rich by working more hours. They get rich by owning more things. They own the companies, the stocks, the land, the media, the supply chains, the technology, and the debts. The poor trade time for money. The rich trade money for more time. But there is another layer to this structure, one that's invisible unless you look at the emotional cost. Poverty is more than financial struggle. It shapes how people think, decide, dream, and plan. When you're poor, every decision is a crisis. Every expense is a threat. Every month is a battle. Poverty rewires the brain to survive, not grow. It creates a constant state of fear that the wealthy never experience. Fear of bills, fear of mistakes, fear of emergencies, fear of falling even further. The rich don't wake up wondering if they'll make rent. They don't go to bed unsure about groceries. They don't lose sleep over medical bills or car repairs or interest payments. They live in a world where the floor is solid. The poor live in a world where the floor is thin and cracks easily. And when the ground beneath you feels unstable, you can't climb, you cling. The most heartbreaking part is that millions of people believe their struggle is a personal failure. They think they're not disciplined enough, not smart enough, not hardworking enough. But the truth is they were placed in a system engineered to keep them struggling. A system where costs rise faster than wages, where a single mistake can destroy a decade of progress, where opportunity exists, but access does not. This is why the rich don't fear competition from the poor. They know the game is tilted so steeply that few can even reach the starting line. And if someone does manage to rise from the bottom, their success becomes a marketing tool, proof that the system works, even though it works only rarely and only for those who overcome impossible odds. But the system the wealthy built has one fatal flaw. It requires constant growth. It requires constant spending. It requires the poor to remain hopeful enough to keep participating. If hope dies, consumption dies. If consumption dies, profit dies. And if profit dies, the entire structure begins to shake. We're seeing those early tremors now. More Americans than ever believe the economy is broken. More are questioning why housing is unaffordable, why wages are stagnant, why the cost of living feels like a trap. More are refusing to play by the old rules. And when enough people step back and look at the system as a whole, the illusion begins to crack. What happens when a society realizes its ladder of success is missing half its rungs? History gives us the answer. When inequality crosses a certain point, change doesn't come gradually, it comes suddenly. Sometimes through political upheaval, sometimes through economic collapse, sometimes through social movements that transform the nation. But change always comes. The wealthy assume the system will protect them forever, but history has shown that even the most powerful empires fall when the foundation becomes too unequal to sustain its own weight. And America is approaching a moment where the model of extraction no longer works because the people being extracted from have nothing left to give. The signs are everywhere. Rising homelessness, increasing suicides, stagnant wages, collapsing birth rates, deepening debt, fading trust, a generation that openly questions capitalism. These aren't random events. They're symptoms of a society reaching its limit. But the ending isn't predetermined. Every system built by humans can be changed by humans. The trap isn't destiny. The cage isn't permanent. It feels unbreakable because it was designed to feel that way. But history shows that once awareness spreads, once people see the architecture clearly, once the truth is undeniable, transformation becomes inevitable. The real question isn't whether the system can change. It's whether the people at the bottom will recognize their power before the system reaches its breaking point. Because here's the lesson hidden inside every economic collapse. The wealthy think they control the system, but the poor hold the key. If they stop believing the structure is legitimate, it crumbles. If they stop participating blindly, the machine stalls. If they stop accepting suffering as normal, the system loses the fuel that keeps it alive. The rich created an economy the poor can't escape, but they also created an economy that cannot survive without the poor. This is the irony they fear most. They've built a structure so dependent on extraction that if extraction fails, the entire economy collapses. They need people to keep struggling. They need people to keep borrowing. They need people to keep believing in the dream long after the dream has died. But belief is fading. And once belief fades, the future becomes unpredictable. In the end, the economy isn't numbers, it's people. And the moment people stop believing in the promises they were sold, the moment they see that success is not about work but about access, the system loses its greatest illusion. The rich may have designed the trap, but the exit door has always been in the same place. Awareness, unity, truth, and the understanding that no system can hold people forever once they realize what they're inside. The wealthy built an economy the poor can't escape, but the poor, once awakened, can build one the wealthy can't control. And that is the future the rich fear most. Not a rebellion of violence, but a rebellion of awareness. A quiet shift in understanding. A collective refusal to continue playing a game that offers no reward. Because no matter how strong a system looks, no matter how powerful its designers are, no matter how wealthy the top becomes, every structure built on imbalance eventually reaches the same moment. The moment when the people at the bottom stop carrying the weight. That moment is coming. And when it arrives, the economy the rich created, the one built to keep the poor trapped, will face a truth no amount of wealth can escape.